evening and welcome to Money Minutes. My name is Lisa Pallavi Barbora. Most of you tune in to Money Minutes to get some good investment ideas or know more about the investments you already have. But given the times that we are living in today, I'm sure many of you are thinking of getting rid of those investments. Nobody will blame you given that the cost of living is so high with inflation at 9 to 10% and incomes are not really growing at that pace. So income growth has slowed. In many cases, people are looking at job cuts. So your inflow in terms of your earning is slow, but your outflow, given the cost of living is increasing, is quite high. So many of you must be reconsidering actually investing your money, and instead you probably think that it's best to sit on cash. However, financial planners we spoke to warn against this kind of a behavior and say that one cannot stress the importance of a long-term financial plan. So the first thing that you need to do is have a relook at your financial plan, take stock of what is happening, but do not sacrifice those long-term goals. Long-term goals are very, very important and they cannot be changed in any manner. What you can do is maybe cut back on those low priority goals, like say a foreign vacation or the fancy car that you are going to buy. So cut back on those goals, but do not cut back on your long-term goals, which are like your retirement or your children's education. Keep investing to cater to those long-term goals. The second thing after you take stock of your financial plan is to look at your asset allocation. Now, the asset allocation that every individual has or your advisor has advised you is in such a way that it caters to your short-term and your long-term goals. Once again, here also it's important that you do not tamper with your strategic asset allocation meant to achieve your long-term goals. Now, if you do that, then what will happen is that if say you stop your asset allocation right now, you change your asset allocation, then you will not be able to achieve your long-term goals, and then the whole purpose of a financial plan or an asset allocation is defeated. Now, long-term goals typically are assisted with an allocation to assets like equity. And equity returns are not linear, and which is what you're seeing now. So there is volatility in returns. In the long term, however, returns do balance out and you do get a good chance of achieving those long-term goals. So you have to remain invested in assets like equity. For assets like fixed deposits, these are mainly meant to cater to your short-term goals. So stick to your strategic asset allocation. Do not pull out of equity. In some periods, you will see a gap in return, but if you remain invested throughout the period of your financial plan, then in all likelihood, you will achieve your long-term return expectation and your asset allocation will make sense. But the key is to remain invested. Planners say that it is a difficult time, but you have to remain invested, be patient, and then reap the rewards of long-term investing. That's all from me from Money Minutes today. Do stay tuned to this for more investment ideas going forward. Thank you.